Everybody, this is Dr. Tom Carr, aka Dr. Stoxx of drstoxx.com. That's drstoxx.com. We've been in business every market day since October of 2002. And if you want to join me and a whole big group of amazing people who are all trying to learn trading or sharpen their trading skills, and we do that together as a community throughout the trading day. And I'm in there for 3 hours in the morning and a couple of hours in the afternoon. And I jump on the live mic once or twice a week to do some trader training. And that's what we're doing now. If you want to join us, go to the subscribe button, scroll down to the live trading room. And if you want to add on the new live options room, where we only do long calls and puts for the most part, a few spreads now and then, you can add that on for a 40% discount. All right. So I don't have a whole lot of time today, and the market's been kind of weird. And, well, weird in the sense that it's being a bit more bearish than most people thought it would be this time of year. And the big question mark, of course, is this going to continue? Is this the start of something a lot more nefarious? Well, I'll alleviate some worries and say that I think the market is going to be leaning bearish into early January, which is a good 3 weeks away from where we are now. But we will have somewhere in the middle of that spread. We're December 17th today. Let's call it January 15th, where I think the leaning bearish will end. In between, we should get a pretty decent bounce. It's a tradable bounce, right? Because we're getting to the place now being oversold, especially on the 1 hour, 2 hour charts, the 3 hour charts even showing oversold, down into that pink zone of the linear regression channel. And that's typically where you start to get some firmness showing up. However, the market is being led lower by some of the biggest companies on the planet, and that's not such a good thing. So we've got NVIDIA dropping hard, PLTR dropping hard, Google dropping hard, and Microsoft and Facebook, they've been dropping hard for a long time now. And the stocks that were looking pretty good, like Apple and what was the other one? Apple. Well, Google did look good yesterday, looked horrible today. I think it's Amazon. I think Amazon was looking okay. Those guys aren't looking so good either. So, yeah, it's just one of those things. The market is pricing in two things, I think, and this is just my opinion. One is an overly hawkish Fed, or a Fed that's a little too hawkish than the market would want it to be. Given that we've had some pretty nasty labor data that came out yesterday, it was not good at all in any shape or form. And then so the Fed really needs to start cutting faster, and it doesn't look like they're going to be cutting faster. At least no cut in January, maybe one cut by the time Jerome Powell leaves his office. That's a maybe. It's just a pretty low percentage right now. It's maybe a 45% chance that we get a cut, a single cut, before we get to halfway through the year. There is a QE going on, but it's not quite the QE that the market would want it to be. It's not that they're outright buying bonds; they're just kind of doing a swap of credit. So it gives a little bit of liquidity to the market, but not as much as it normally would be if the Fed is just going in there and buying billions of dollars worth of bonds every month. And yeah, so all right, so that's one problem. The pricing that in, market didn't really expect Jerome Powell to be so tight, I guess. And there was some dissent too. That's the other problem, because it's not just him. It's three of the Fed chairs are actually they don't want to have any cuts at all. And maybe even a hike, So, and so we've got that problem going on. Then the other problem is, probably the bigger problem right now, is that the whole AI thing is starting to unravel. I don't think it's going to be unraveling completely. I think they're just trying to work out the kinks. You've got too much energy, not enough energy supply. You've got too much computing power needed and not enough supply. And you've got everybody and their mother wanting AI in some form, and there's just not enough to go around. So that's a problem. You've got backup in the supply chains, and you've got overheating servers, and you've got chips that aren't fast enough. And so it's just one of those things where the idea looked really good on paper, and then you start to work out the bugs, and the devil's in the details, as always. So That's where the market's at. That's not going to get solved, either one of those, anytime real soon. That's why I think we've got a 3 or 4 week stretch where the market's going to be pretty much pricing in the worst case scenario. And that's usually what the market does. It overdoes it on the fear side, underdoes it on the greed side, overdoes it on the fear side. So by the time I think we get out to about mid-January, we should have a pretty nice, very nice, in fact, buying opportunity ahead of us. But we're going to have to be very, very careful between now and then. So in both rooms, the live trading room and the live options room, in my newsletters, been getting a little bit more cautious and a little bit leaning on the bearish side of things. We're finding those spaces where there is some good strength and where some good upside can be had, and where money is flowing out of these big tech stocks, but it's going into these other sectors. So we're able to ride those waves. We just have to stay out of the rough waters of the other stuff, right? Which is mostly the mags and the techs and the growth names. Okay, so let's look at some charts. With that all as kind of backdrop, let me show you what's going on here. So this is the futures chart of the S&P 500. Here's the thing that is, it was a big red flag when it happened. And then we had this really beautiful rally back. But here's the deal. When you have an uptrending chart, you should typically see throughout the uptrend, and this is true from the bottom of the April tariff crash right down here, all the way up, all the way up, all the way up until this low pivot here, we should see a sequence of higher lows, right? I was taught when I was learning technical analysis 20 years ago now, maybe more, 25 years ago now. When I was learning technical analysis, you know it's an uptrend when the lows are getting higher. You don't have to necessarily see the highs getting higher, but you do have to see the lows getting consistently higher. That's an uptrend. And sometimes the lows get higher, but the highs kind of stay at the same level, and then you get a wedge or a triangle, and then you get a really nice breakout to the upside. In both cases, whether you get higher lows and higher highs or higher lows and equal highs, you have an uptrend and you have something that is bullish. This is not bullish. This guy right here, this destroyed that sequence of higher lows. We also preceded it with a higher high that went to new all-time highs. I mean, it was a genuine higher high. But from that moment on, we had a lower high. And this is a nice rounded top. Rounded tops are just as bearish as rounded bottoms. And yeah, so here's your last higher low right there. Maybe we can make that little pivot, our higher low. And we had a sequence of them all along the way, right? Higher low, higher low, higher low. And then we'd also had a sequence of higher highs. That's a perfect kind of beautiful uptrend, easy trading. You know, you buy the dips, you sell out when you gets up to that resistance trend line, or when it gets equal to a previous pivot low. So the stop prices are pretty tight and low risk. The target prices have good upside and they're very clear where we should get out. All that is off the table after we got that lower low, right? So technically speaking, that was really the end of the uptrend. Now, the other problem with that lower low is that if we can do this here, if we put an uptrend, we don't have to use all of these, but we put an up trending support line under those lows, and then let's do this a little bit better. We'll skip that last one. We'll pull this up right there. That's a nice capture. See how it captures that low, that low, that low, this sequence of lows, that low, and then we had the break. We had the break to give us that lower low. Now that line becomes not support but resistance. And you can see how it played as resistance all the way up. I mean, it was starting to ride up, right? It was this 2-week stretch right in here. Hey, if you haven't made a whole lot of profit in the last couple of weeks, I don't want to say blame the market. And don't blame me, because we actually have been making profit for the last couple of weeks. Not every day. Yesterday was a red day. Today looks like it's going to be a red day, at least for me. But we've been 2 days ago, we hit all-time highs, both in my personal account and in both trading rooms. So we're doing okay. Just that we've had to get past the big stocks, looking past the mags, past the growth names, to other sectors, right? Healthcare, shiny metals. We were in bonds for a little while, and then it kind of petered out. Um, a few handful of stocks like Tesla gave us a really nice run, hit our target yesterday, and now it's falling back quite hard. Um, and a handful of others, right? Some healthcare names, some biotech names, and mostly shiny metals. That's really where a lot of money is flowing anyway. So all that's to say, bearish look, likely a bearish 3, 4, 5 weeks ahead of us, with a little relief rally in the middle that will probably start the 26th of December and probably peter out by New Year's Eve. That's just my thought. I'm not holding myself to that. I'm not going to trade exactly that, because we always look at the market each and every day and throughout the day to get a good read on what the latest thing the market is thinking. But right now, I have to say, Mark is not all that happy, and I don't think that's going to change anytime real soon. But until we get to next week, late next week, right? Okay, so that's the S&P 500. You're going to see pretty much the same picture for the NASDAQ. It is a smaller index. The big mag stocks at the top of that index form a bigger percentage of the NASDAQ 100. So it's going to be a little bit more volatile than the S&P. The S&P also includes energy. Energy has been horrible lately, by the way. I always kind of think of it as a safe haven when the market gets volatile, and it may come to that in a few days. But shorting energy names and shorting oil has been a good trade. So anyway, we were looking at ERY long yesterday in the live trading room, and I talked about it in the morning, and I had it on my radar, and I had it on my trading template, and I just didn't get us in, unfortunately, because it just shot way up, and now it's coming back down again. No, but it's the same thing, right? Higher lows, higher lows, higher lows all along the way, and a nice test, and then you get this break right here, right? And then the roll up into resistance, slightly bullish trajectory there too, which was nice because we were mostly long during that time. And then, wow, when the market falls, it really falls hard when it's pricing in stuff that it hadn't priced in yet. So this whole bounce right here, by the way, 4 or 5 days of almost straight shot up, was in response to a shifting of the sentiment with respect to AI. And you had also NVIDIA, and China was starting to open up, and then China closed it down. You had some good news about tariffs and reducing those a bit. Then we had some good news about Ukraine and Russia, the war settling down. And so, but the AI narrative was starting to shift in a bullish way. And then for some reason, I don't keep up on all the little news headlines that come out every 5 minutes. But for some reason, the sentiment went back to bearish. So, all you have to do is look at the market, and you know that it's not happy right now and doesn't have a good, healthy sense of the future. This is not profit taking. This is not what I call back and fill, which you typically see, a couple of days of softness after a nice run. This is not back and fill. It's not profit taking. It's not filling the gaps, which is kind of a silly thing anyway. This is a pure market fear and pricing in economic realities, the Fed, AI, that hadn't been priced in yet. Now they're being priced in. Okay. The good news is it always overshoots, as I just said, and that can give us a nice buying opportunity, but we're not there yet. So small caps index, this has been really good, but you're going to see the same sequence, right? Here's higher low, higher low, higher low, and then we had the break, and then we had the test way up there. Look at that test. Complete rejection. So this is what I call an SR flip, right? If you have a channel line, in this case, a trend line that gives you a good set of areas of support, right, all along the way, and then you get the break, right there, you get the break, then what was formerly a line of support now becomes a line of resistance. It's called an SR flip. And sometimes you see prices go up and down, up and down, up and down along that line, or a little tight range along that line. And that means that that line is very significant for whatever reason. Could be that's a valuation line, or it could be there's a whole bunch of calls and puts at that strike price or whatever. All we need to know is that once you're underneath a well-established support line, it is now resistance, and that's where exactly how it acted. Now, the good news about the small cap index is that it is still, apart from the breakdown of that, the trajectory northward is much stronger than the other two indexes. And the little pullback that we're seeing right now, we're still up near the midline of the LRC. We're still above the 21 EMA. The 21 is still above the 50 period SMA. So those are all bullish signs that signal that, the small cap index is kind of outperforming, and it's outperforming today. It's only down 32 hundredths of a point, whereas the NASDAQ is down 1.7%, 170 basis points. So that outperformance is a good sign, but the small cap index is not going to just rally if money's coming out of the other indexes. So it's a good sign, but it's not flagging yet what we want to see, which is a good, healthy green candle bounce on good volume. And when we see that, then we can get back into small caps. And we should then see follow suit the Santa rally and the other indexes. All right, let's take a look at Bitcoin. I have been very bearish on Bitcoin ever since it broke out. Where was it? Early November. That big red candlestick right there broke a bunch of support lows, and that's it. You got to stay out of Bitcoin. And other than being short Bitcoin, which we did a little bit of, my timing wasn't very good. We did take some profits, but I got in a little bit too late, and I held on to it a little too long, and it wasn't a great trade, but it was a profit. But I should have shorted on the day that I turned bearish. If I had shorted there with a wide stop, we would have had a very nice run all the way down. Now, I think it's setting up for another leg lower. I don't think Bitcoin has too much more to go. 75K has been my target. It's a target of someone else in my pro trading group who was bearish on Bitcoin well before I was. He got bearish back in mid-October, which is right around here when it hit that all-time high and then started a straight fall right down, took out that low on that bar right there. That's when he turned bearish. And if we had shorted then and held till today, we would have a really nice trade. But I think it's probably still going to fall. So 85,000 to 75,000 is a 10K. It's about a 12% drop, which you could leverage with BITI, or you can short the micro E-minis. But I would not buy Bitcoin. Don't buy it. Not until we see not until we see this resistance trend line get broken to the upside. Right? It was resistance now, and you can see it was tagged yesterday, along with this bear flag support line that was also tagged from the underside, and it right back down. This is today, actually, right back down again. And I think, probably in a week, maybe less. By the end of the year, I bet it hits 75. Ether, I think, is it was looking more bullish than Bitcoin right in this area right here, because it was taking out two weeks of range highs. And at that point, I had my resistance trend line over the tops of these pivot highs, which means it was a breakout. But then to make this parallel, I had to put this line, the support line, way down here, and that clearly was not where the support was. So if you line up the support line underneath these pivot lows, right, which is where you need to start anyway. I know it's typically the tops in a downtrend to establish the channel, and then you parallel the supporting line underneath it. But in this case, because I don't know, there was so many different support lines, support pivots, we can start with the support line, and then we make the resistance line parallel to it. And when you do that, it nicely lines up with the recent pivot high as a test of resistance, and it failed. So right around 3 bar reversal right there, bam, boom, a little bit of a pause yesterday, which drew me in. I was such a sucker thinking that we would get at least a 2 or 3 day mini bounce in Ether, and we got stopped out today. It actually shot way up. Both Bitcoin and Ether shot way up on some kind of a Trump tweet or something, and then stayed up there for about an hour. Looked kind of tempting, but then it right back down again. So I think we've got range lows down here around 2760, and then the support low down here at 2600. But I think maybe this goes all the way to 1500 before it's all said and done. Bitcoin has a better macro picture, right? You've got governments adopting it. You've got companies using it as assets. Ether has a much smaller footprint in the crypto world. So if anything's going to fail, it would be this one. In fact, I have a guy in my pro trading group that thinks it's just going to go to zero, right? It's going to be like a penny stock or something in the future. So I'm not that negative about it, but yeah, I learned my lesson yesterday with that little failed bounce that I thought was going to manifest. And to be fair, I went down to the hourly chart and it was building a nice bullish base. It was nice rounded bottom base, and then started to break out of that range. Volume was coming in. All the things were lining up for a short term, 2 to 3 day, perhaps bounce higher, and it just didn't happen. Where is it happening? Well, it is happening in gold. This is a beautiful chart. It is a strong trending chart. You don't see any kind of lower low here, right? We're not seeing a whole lot of higher highs just yet. This is, however, a very bullish, this is what we call a scalping pattern, right? Rounded bottoms getting a little bit higher, rounded bottoms getting a little bit higher, rounded bottoms. It's called a scalping pattern. It is one of the most bullish patterns in the market. It's slow and lazy and easy to hang on to for a while. So we have gold calls in the live options room, and we have GDX miners in that room as well. We have calls in GDX. We don't have any gold in the live trading room just yet. So I probably will drill down and get us into one of the miners. That's been a really good space. And both gold and silver are going up, and the miners have been kind of flat for a few days. So that's a good sign that it's like they'll likely catch up. But look at silver. Silver is just going crazy. And I frankly don't understand fully. It has been a very crowded trade. And typically when you see trades getting really crowded, by that I mean everybody's in it. All the big boards are in it, and they've already leveraged out all of their positions. And if all the big guys are already in the trade, there's nobody left really to push it higher. But apparently that's not the case. It's still going higher, and it's really up today, 5.3%. Best chart in the market right now. So here's your pattern, right? This is the rounded bottom, cup and handle continuation pattern, because it's in an uptrend and it's not a lower low. It's a higher low breakout, and then we have a nice looking flag that formed, right? You need 5 bars for flag. That's a little bit more than that. And then I'm not sure that we would call this a flag as much as more just a pause. But there's your flag with a breakout today. Not 5 bars, only 4, but it's close. All right, so we're long. I'm still long a little bit of silver with the AGQ from a previous trade in the live trading room that we had on. I just wanted to keep a little bit on, and I think it's probably going to keep going for the next couple of months. I really don't see this. I just don't. Yeah, on a day like today. Yeah. So silver is a good place to be. We are long SILJ calls in the options room. That's a silver mining junior miner fund, and we'll probably get long. And we're long one of the silver miners in the live trading room. So we've got silver covered. We've got gold pretty much covered. We don't have a gold mining stock yet. So let's take a look at GDX. GDX is your mining your large miner. There's a large mining fund and a small junior mining fund. GDX is the, and I take it back. In the live trading room, we were long Nugget, which is the 2x bullish version for GDX. So we do have gold covered in both rooms. It's a little bit of a duplicate trade, but when you got a space like this, and there aren't many good spaces out there, you, you gotta put all your people into that space. So this is a very bullish pattern. It's not as bullish as gold itself. It's certainly not as bullish as silver. But I think I'm going to adjust this pattern a little bit because this is a very deep cup, and the neckline is way up there. I thought it was a little lower at that pivot right there, but that's your cup, and then your handle is, my alarm's going to go off here in just any minute. Your handle's right here, right? And now it's kind of getting stalled on the breakout, but we're seeing that in the silver miners as well. I think this miners just kind of they break out and then they settle down a little bit, then they go higher and settle down. But as long as the underlying price, both gold and silver, are rising, and they are, we should see the miners catch up. All right, I'm running out of time. Let me just do a quick look at the mags. We'll do worst to best. AVGO is your worst, and oh, ugly. Way up here, all-time highs on earnings, which were great, awesome. And then, however, they had one little problem with their backlog, and the problem is that AVGO, if you look at AVGO versus NVIDIA, both kind of in the same space, but NVIDIA has a backlog 5 times as big as AVGO, which means that there's 5 times as much demand for NVIDIA as there is for AVGO. These are orders that haven't yet been filled. So that was a big concern. And then there was something about AVGO's CapEx spending, I think, too. PLTR, we are short PLTR with puts in the long options room, and I think it's just getting started. I'm afraid to say if you like this stock, it's going to be a rough go for a little while. I'm pretty sure. Oh, there's my alarm going off. All right, let me just finish this up real quick. Tesla, Tesla, it can be bullish. All-time highs yesterday. One of the best stocks in the whole market. Just doing a little cool off today, and there was something about California and not being able to sell cars. I think that's kind of a non-event. I think the market's overreacting. This looks to me much more like profit taking. When you see 3 big green bars heading higher, and it's a breakout to, I'm not sure if this is all-time highs, but it certainly is 52-week highs. And then you see a little bit of some back and fill. That's back and fill, right? Lower volume, no real reason to completely sell off. So there's a gap right here. It probably will enter that gap, and then we can start to look again at taking a long in TSLL. We are long puts on NVIDIA, and man, they're doing great for us today. We shorted them right here when it rallied back up very weakly on low volume into the falling 21 period moving average and then started to roll over. That's when we bought puts. We bought them with a lot of time, and we bought them way out of the money. So it's kind of an experimental trade. I just want to hang on to them as long as possible. I think NVIDIA could be 140. Not real soon, right? Not tomorrow, but maybe sometime before it really gets some good traction again. And I tell you what, if it hits anything below 150, you got to get out there and start buying both hands and fists. Buy with everything. Why do I say that? Well, partly is this very well-formed head and shoulders top. You want to see a right shoulder lower than the left. You want to see a big high head above both shoulders. You've got that. And then if you drill down here into the volume balance, you're going to see that on the rises up, volume is very light. On the falls down, volume gets heavier. So that's also a sign that this is kind of the real deal right here. And if you take the measurement from the neckline up to the top of the head, I forget the number, it's like 40 something points, and then you subtract that from where it broke out of the neckline, and that gets you down to 140. We were in Google yesterday. It looked really quite nice, right? In a pretty weak market, it was one of the few greens. It was holding at the 21. It's a soft pullback and a nice looking uptrend. There's no lower low here yet. So even still with today's big red bar, it's not looking horrible. You've got the cycles down here near the bottom. Oversold stochastics, that's typically where you start to see some buying come in. But it's setting up to be a good buy, but it's not there yet. All right, I just wanted to look at those, maybe Amazon. So we are short Amazon in the live trading room using an inverse fund. And one of the reasons why it hasn't printed a lower low yet, but it is a lower high, and that's a pretty convincing lower high. And it is a rounded top right there, which typically gets some downside. Okay, I'm going to let you go. I will produce a video, put a link in the room, and then I really need to dig back down into the market. We probably will get long one of the gold miners before we say good night tonight. And yeah, I'm still thinking there might be a little bit of a bounce in the indexes tomorrow, but right now, sure doesn't look like it. And I'm not going to get long until we get confirmation. God bless everybody. See you back in the room in just a little bit. Bye for now.